Manishi Raychaudhuri, Chief Executive Officer of Emmer Capital Partners, joins in. Manishi, hi, good morning. It's Amina joining in. I was going through a recent report that you put out on Reuters where you talked about how India has accounted for a significant $15 billion outflow in terms of foreigner money. Of course, the last 2 days have not been so bad for reasons that may be more local in nature. How are you reading into the recent recovery of the last 2 days? Do you feel like there has been a significant change in investor sentiment when they look at India? Or do you feel like the risk reward now is turning favorable for our markets after this correction and the significant outflow that you mentioned?
Thank you very much, and thanks to your viewers for this opportunity. I wouldn't call it quite a significant change in the investor outlook, but certainly there has been a degree of, sort of enhanced interest in the Indian market after this healthy correction that we have seen over the past couple of months. India used to trade at almost 90% premium if you go back to late September compared to Asia ex Japan valuations. That has now come down to somewhere around 55%. That's still high. I mean, the long-term average, last 10 to 15 years average is about 25 to 30%. So it's still trading maybe at one standard deviation higher than the long-term average. But clearly, the kind of correction that we have seen, and in particular, as far as the large cap opportunities are concerned, which are close to their long-term valuation multiples, that has engendered a degree of increased interest in India. Some of the fund managers, the investors that we regularly speak to, they are clearly taking a relook after having sold down India significantly over the past couple of months.
Manishi, let's talk about actionables, right? And I want to keep it local for a few minutes before we, of course, turn our conversation more global and relative to what's happening on Wall Street and what happens in the rest of the world. Do you see pockets of interest, value in the current setup? And if you do, which are these pockets that you're looking at closely when you talk about India? Consumption, I know, has been a bit of a worry point, but there's hope that the second half will look a whole lot better. Infrastructure spending is expected to pick up. And more importantly, at least what we've seen in the last day or two, is the Modi trade seems to be back in some fashion.
I would name three pockets of interest.
Okay.
First of all, financials, particularly the private banks. And this is something I've been harping on. If you look at both the short term and the long term, it's really the top rung private sector banks that are likely to gain market share significantly. The public sector banks still occupy about 65 to 70% of the Indian lending space, and that's clearly going to change going forward. Second, and this is relatively more near term, I would also talk about IT services. I think as a consequence of the geopolitical changes that we're seeing, as a consequence of the Republican sweep, India, particularly in terms of some of the select group of Indian exporters, could turn out to be, so-called winners in this environment. The US dollar has appreciated. That's also a short-term, near-term tailwind for the IT service companies. Third, I would talk about consumer discretionaries, both autos and two-wheelers. Autos over the long term, the four-wheelers over the long term, and two-wheelers in the near term, as we enter and cross the wedding season. And there's a degree of support to rural consumption that has also come through as a consequence of a good harvesting season, a good monsoon, which should play out over the next couple of quarters. So those would be my pockets of possible outperformance, both over the longer term and the near term. I would think that, you talked about industrials and infrastructure. That is going to be a theme that would be multi-decadal for India. If India wants to transition to, to manufacturing and exports, getting better infrastructure, I mean, there's really no alternative to it. And I think the government is going exactly in that direction. There are some stocks which are overvalued. They have corrected a bit, but possibly investors would be better off buying them at lower valuation compared to where they are today. But it's really a multi-decadal theme that we would continue to focus on.
All right, thank you so much, Manishi, for joining us. Manishi Raychaudhuri there.